So if your portfolio is hurting, you're not alone. There's a lot of us that have tech stocks, high growth stocks, speculative stocks even, and those stocks are just not doing good right now. What's been happening over the last 2 months or so is money has been rotating out of these type of investments and they've been moving to your traditional value stocks, right? Talking like Waste Management, McDonald's, Visa, those kind of companies. Go look at their charts. They're pretty much hitting a new all-time highs week after week. This is why the S&P 500 for the most part is still pretty much at its highs when a lot of us are seeing our portfolios not quite at its highs, actually quite significantly off of its highs. But there's one stock sector specifically that I'm very interested in. I understand those businesses fairly well and I really like those companies. I noticed that these stocks are actually kind of getting on sale here. And those are stocks in these software as a service or cloud related companies. Now these stocks were hot in 2020 and a lot of them I just kind of stood on the sidelines and just waited for an opportunity. I've opened positions in some of them over the last few months, but majority of them, they've just been too high flyers for me. Just value just wasn't there and I was like, okay, I'll just wait for an opportunity. And maybe that opportunity is now. Now, I'm not saying now specifically as in like today, you got to go out and go all in today. No. Probably averaging over time over the next few weeks and months because this is going to be probably something that takes time to play out. But if you've ever been interested in these high flyers before, you should definitely be interested now that they've come down to more reasonable valuations. So WCLD is a cloud ETF, and from the bottom of 2020, guys, to the peak here in February, this ETF was up nearly 180%. To see an ETF up 180% in less than 1 year, it's unheard of, it's abnormal, but unfortunately a lot of new investors that have come to the market in the last year kind of got used to this norm. They're like, this is how easy it is to invest in stocks. This is what stock market investing is. I can make money in this. I don't need to work a job. I can retire early and just give people a false sense of security in the stock market. And you know what happens when everyone's complacent? Boom, the rug gets ripped out underneath you and you suffer. So far in 2020 here, things are looking different. From our peak, this ETF has taken a breather to a tune of 17%, which is a very healthy and normal correction, especially after a steep run in under 12 months. And when an ETF like this is down 17%, it means that a lot of their individual holdings are typically down a lot more than 17%. 20, 30, 40% would not be out of the norm here. And with all of this selling we're seeing with this ETF and the stocks in this, it has a lot of long-term investors piecing out of the markets, locking in losses, selling at the bottom, and just calling it quits with investing. And hopefully if you're watching this video, that is not you, because this is the time when everyone else is fearful, when everyone else has lost conviction, when everyone else is like questioning their investments, questioning if they made the right decision in investing in stocks. You and I are going to make a lot of money over time capitalizing on this. I've been preaching this for months. If you go back to my previous videos, you can see the amount of dislikes I got on them because I kept stating this simple phrase, which is that valuations do matter. And I kept getting hated on, I kept getting thrown under the bus saying, hey, look at these stocks, they keep going up. You keep saying that you're not going to buy them, but they just keep going up. You don't know what you're doing, you don't know how to invest. And I'm just like, okay, well, I mean, you're right. Right now, I look like a fool. I'm here on the sidelines watching all these stocks go up irrationally, but everyone else seems to be making money. But then sooner or later, things come back to reality. And now is the time where my investment style tends to shine. I look at valuations, I look at balance sheets, I look at income statements, cash flow statements. I look at all of these metrics to determine if a business is actually worth investing in. And then I try to look at their stock price to see if the stock price today actually justifies the business valuation. If the answer is no, I'll sit on the sidelines if it's a good business and I'll wait for that opportunity. If the answer is yes, I'll start nibbling in, dollar cost averaging in, and building up a position in some solid businesses. Now the thing is, you have to be prepared. If you're going to be following a strategy like I do, you have to be prepared to just see your stock portfolio flat or down for periods of time. There are plenty of positions I've done this with in the past that have just done nothing over the short term. Over the a year or so, they just kind of go sideways. I'm down 10%, 20%. I just keep averaging in, lower my cost basis. But then before you know it, the market realizes, hey, wait, this stock is cheap, this stock is a good company, we're going to start buying it. And that's when you see these massive runs up, and that's when you see your money doubling or tripling just because you had conviction and just because you held on. So now you have to ask yourself the question, with these SaaS cloud software type stocks down 10, 20, 30, 40% plus off of their highs, are you going to be one of those investors just says, peace out, I'm done? Or are you actually going to put in the time, do the research, and double down on these plays? Now, I'm going to be clear, this is not financial advice. I'm going to go through some stocks in a second, but these are not recommendations by any means. These are just some ideas that I'm looking at personally that I want to share with you here on YouTube, because I feel these stocks have a good future ahead of them. They have pulled back quite significantly, and they are starting to show value. Doesn't mean that this is the bottom in these stocks. Doesn't mean that they're going to start recovering and, in a month from now we'll make a ton of money on it. Like I said, this could last a year, 2 years. Who knows how long this bear market for these type of stocks last. All I know is that these are good businesses, and I expect them to be better businesses in the future. So with that, guys, let's jump over the charts and let me share some ideas with you. Okay, so jumping over to the charts here, let's kick it off with one of the best run companies in the cloud / software as a service space. I believe that's ServiceNow. This is a extremely profitable business, extremely well-run business. Don't really get too many pullbacks in the stock. However, we are seeing some sort of weakness right now. We're down close to 20% off of its highs. They had stellar earnings last week. Everything was good from a business perspective. However, because of the whole sentiment with growth stocks, with tech stocks, with software type stocks, this one's getting caught up in it, and this one is seeing some selling pressure. So I'm going to be watching this one closely. We're sitting at this moving average here. I think there's a very good possibility we come down to the orange moving average, the 100-day moving average. So let's say $400 or so per share. If we come down anywhere near this, I would say this is a strong buy for me personally, and more likely than not, this will be a new addition to my portfolio. So this is kind of where I'm watching. We'll see if we come down there. We come down there pretty often, every little while or so. You can see 1, 2, 3 times in the last couple of years. So it's possible, it's likely, and I think would be a healthy move for this stock. Next up is a fan favorite on the channel, Splunk. And this one is kind of drilling down to the Earth's core. I don't know where the bottom is for this, guys, but I just keep averaging in slowly over time. Now, I have my position technically built out, but when I see prices that are, 10, 20% lower than what my cost basis is, it's just too tempting to buy in. Because think of it this way, right? I found value in this stock around this price point here, and that's where I was kind of buying in, averaging into my position. As you go lower, averaging a bit more. So I found value all around here. Now that we're in the 120s, I find even more value in the stock. Nothing has changed in terms of my outlook for Splunk. It's just that the stock price has gotten much cheaper. So yes, this is another name that I am adding to. Moving on, we have another stock that I love that, it's just kind of just stuck in a rut. They're going through a few business related things, which is kind of holding it back right now as well. The Slack merger, and that's of course with Salesforce. This stock is a huge performer. You can see how well it did in 2020. It's given back some of those gains now, a healthy consolidation pullback. And I think this one long term is again getting ready for a monster move. A lot of these stocks are kind of, in a spot right now where they just need time to breathe. They just had too much of a movement in 2020. It's abnormal to see stocks move up that far that fast, and it's natural to see the market pull back, people take profits, and that results in lower stock prices. So again, fundamentally love this company, will buy this company if we dip anywhere below, let's say they're on $200 range. I'd be buying quite heavily once again. And long term, I have no doubt that this is going to be one of the biggest software companies in the entire world. Next up is one I covered on the channel recently, and that is Spotify. This one, it's not a huge conviction play. It's a pretty good conviction play. I like the product, I like the company, I like the fundamentals, and it's just one I'm going to just keep averaging into over time. Again, I see a strong support here at this level. You can see it's kind of correlated to where the stock has kind of tested a few times, like around here, and here. Kind of aligns with the 229, so 230 level or so. If we come down there, would probably be another point that I add more into Spotify. Again, if you want to know my full thesis on Spotify, check out the video I made about a week ago or so. Moving on, another competitor really to Splunk, and I'm seeing a lot of chatter online that this company's stealing business away from Splunk, and that is Elastic. Now, I think that Splunk is still going to be just fine long term. They're going through some business changes, and that's what's hurting the company right now. Customers are kind of questioning the price and all that stuff. But I think over time, guys, Splunk has already proven that it's a stellar product. And even though you have competitors like Elastic offering a cheaper product, it doesn't necessarily mean it's a better product. So I think Splunk will maintain those high quality, large businesses like the Fortune 100 companies, which I believe they have over 90 out of 100 Fortune 500. And I think Elastic can come in there, take up the smaller companies, smaller mid-market businesses, and they can thrive as well. So I think there's enough space for both these companies. Again, this one is, it's kind of been pulled down with the whole sell-off. Nothing specifically wrong with this business, but valuations got way too stretched up here, and it's pulled back now to a more reasonable level, right? If you just kind of ignore this whole chunk of movement right here where the stock market just got crazy irrational, you can see the stock is kind of back to where it was, prior to this big run up. So we're not really down massively when you look at it that way. But of course, if you bought near the top here when there's just so much hype, everyone is just flooding into these stocks, yes, you're probably underwater right now. But I think, these prices seem to be fairly reasonable for this stock. Not dirt cheap, but it's starting to get there. All right, I'll throw in a couple more here, guys. We don't really talk too much about on the channel. PagerDuty, I talked about the stock a little while ago when it was down in the teens, low 20s. I know a couple of guys in my VIP group actually bought this stock, and they've done quite well on this. And it seems to have, had an amazing run in 2020, like most of these stocks. This one's actually gone from, a low of 12 to a high of almost 60. So this was one of the biggest movers that I see. But now it's pulling back, it's giving away some of those gains. Again, we're seeing a similar trend where it had a big run from November till February, and then it's kind of given back a lot of those gains right now. So we're sitting around this support level right here. Things are looking good. We are looking very oversold in this stock. However, this is just one that I thought I'd throw in here. It's a smaller market cap company, interesting one to watch. Let me throw one more in here. It's MongoDB. This company, a very niche product, but a very well-designed product and a desired product, right? They do databases, that kind of stuff. I think it's an acquisition target at some point, but it is getting kind of expensive now, so it may not be worth it for some of these companies to acquire them. But regardless, it's a very, very strong business here. You can see over the years, this one has just been a consistent mover, right? Apart from the 2020 dip, it's just kind of been just doing its thing, going up over time. Again, irrational behavior right here, but we've pulled back and now we're kind of moving up again slowly. And I think over time, this one will be absolutely fine. I don't think there's anything wrong fundamentally with this business, their industry, the product, their customers, everything looks good. So this is another one that, hey, it could pull back to this level to test this because we haven't tested it since last year. But regardless, if it does, probably a buying opportunity, guys. So again, I want to make this very clear. These are not recommendations, guys. I'm not telling you to go out there and buy these stocks. That's your decision. You make that call. I'm just letting you know that these are companies I am looking at right now. What I can tell you is this: the valuations for these businesses are looking more attractive now than they did 3, 5, 6 months ago. And that just means that someone that looks for value in their individual stocks, they are starting to look appealing to me. Now, I do want to throw out a word of caution. A lot of people just think, a stock is down, you buy the dip, and over time you'll make money. Yes and no. Certain companies will recover and will make new highs and will make you a lot of money over time. But these garbage companies, honestly, just trash companies, they're not going to make you money over time. In fact, they're probably going to head closer and closer to zero and just tie up your capital and just give you this false sense of hope that they will come back at some point. I feel like maybe I hold a couple of these in my speculative portfolio, which I may dump at some point, but I know that a lot of people on YouTube watch other YouTubers that pump these garbage stocks and they are down 50, 60% or more on their positions and just keep telling themselves, hey, it's gonna come back. These are good companies, their story is good, all this other junk. And I just look at the valuations and I'm like, nope, I don't see that happening anytime soon, if ever. And in this market, Valuations matter. That's what investors are looking for. So those companies have a slim chance of actually coming back. So just set yourself up for success, guys. Stick to quality companies. Stick to businesses you understand. Stick to high conviction plays. Don't just go in there and follow anyone's random stock pick here on YouTube. Even with my videos, when you get an idea, always do your own research. Anyways, guys, hope this video was useful. Stay strong. I'm in this with you. And thank you so much for watching. Don't forget to invest positively. I'll see you in the next one. Peace.